Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar, a combined key reversal down and bearish engulfing pattern on Friday. It was an interesting session as the prices tested up over the dark blue highlighted upper time, currently at 107.24 of the late December 2023 to mid-March 2024 bearish Andrews pitchfork, and towards the May low at 107.66, but hesitated and turned away lower, moving and closing below both the upper time and the April 2020 low at 107.25. and penetrating the bright red middle time, currently 106.92 of the bearish shift pitchfork for the same move as the bearish Andrews pitchfork, and finally closing just below it. Further below is the 2020 low at 106.36 and the lesser Fibonacci line at 106.1313. We now have a large amount of overhanging ammunition overhead, stretching from mid-November last year till 3 weeks ago. I'd also previously pointed out the recent bearish bow tie formation. Now, the theory behind this suggests two things. Firstly, to look which way the moving averages move after the crossover to indicate the next direction, which in this case we have seen suitably has been downwards. Secondly, between 15 to 20 sections after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it would be between the 30th of April to the 6th of May, so watch out. Finally, I have repeated this often over the last 3 weeks. Please pay special attention to the crossover of the times circled on about the 26th of April, Friday, and the 9th of May. Around and usually very, very short time after, one may see volatility. Now, so far today, a slightly higher open and a test up to the dark blue upper time, but then and the April 2020 low, but then a pullback down to the bright red middle time. Cable, aka sterling against the US dollar. A bearish dark cloud cover pattern on Friday, but more importantly, it was a weekly key reversal up. Prices rose up towards the gold highlighted flatlining long moving average overhead, currently at 125.5, but balked at testing it, though still close for a second consecutive session up over the lesser Fibonacci line at 124.60. Further below, and in relative terms quite a way below, is the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, with the June 2020 low at 122.48 below that. Meanwhile, further on top, we have the 50% Fibonacci line of the July to October 2023 move at 125.90, with a flatlining short medium moving average and medium moving average further up, and they're currently 126.18, 18, and 126.49 respectively. Finally, I previously pointed out the bearish bow tie formation made up by the four moving averages 4 weeks ago. Now, the theory behind this suggests two things. Firstly, look to which way the moving averages move after the crossover to indicate the next direction, which has been downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of an existing trend, volatility. In this case, it would be between the 26th of April and the 3rd of May, so we're right where we are now, so watch out. Now, so far today, a reaction move back up, and looking like an immediate countering bullish engulfing pattern right now, but it's very, very close, and it's only just if it is. Euro sterling. A fourth bearish black crow on Friday, with now multiple closes below the flatlining long moving average, currently 86.04, and a second consecutive close below the flatlining medium moving average, currently 85.73. Now prices dropped down to the slowly rising short medium moving average, and that's currently 85.57, where it was supported and not too far away from the broken dark blue highlighted upper time, currently at 85.51 of the broken November to December 2023 bearish shift pitchfork. Now this pitchfork had been broken late 2 weeks ago, and I had been wondering if the market might decide to slide down the top side of the upper time. Despite the large recent moves, prices are still within the purple highlighted late January to date expanding wedge pattern, currently 85.39 to 86.48. So far today, a higher open, but capped by, of all things, a short moving average, currently at 85.69, and the market dipping down through the short medium moving average and the broken upper time as far as the combined December 2022 low at 85.45 and December 2023 low at 85.47, but not really pushing down through those yet. Now further down, we have the purple highlighted lower trend line of the expanding wedge pattern, currently at 85.39. US dollar against the Japanese yen. An unusual but very large key reversal up on Friday. It was unusual as it came after a prior bullish pattern, and Friday was indeed a third bullish white soldier. A new all-time high, one not seen since, well, it wasn't be an all-time high, a new high, one not seen since June 1990. The base of the action, unsurprisingly, was on the bright red highlighted middle time, currently at 155.03, with the market punching up clear through the June 1990 high at 155.78. Above now is the May 1990 high at 159.61 and the April 1990 high at 160.34, plus the purple highlighted middle time, currently 159.91 of the larger February 2022 to January 2023 bullish shift pitchfork. Now so far today, an extraordinary move already. A move up through the May 1990 high to peak just over the purple highlighted middle time before a sharp about turn and move down all the way down through the June 1990 high and the bright red middle time, threatening a possible weekly key reversal, all in just the one day, but not quite making it as yet. But we're on course for a possible daily key reversal today. However, now prices have stabilized a little around or just above the bright red middle time and on the June 1990 high at 155.78. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish piercing line pattern and bullish double pattern on Friday. Prices were capped topside by the dark blue highlighted broken lower trend line extension, currently at 727.22 of the dark blue recent ascending triangle pattern. Now looking below, we have this dark blue upper trend line, currently at 723.82 of this same pattern, with the long moving average and the short medium moving average is just below, and they're currently at 723.49 and 723.05 respectively. All of this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all, as though I did not show it here on this chart. There were also monthly key reversals up for March in US dollar CNY, the spot onshore Chinese yuan, plus monthly key reversal up in March for the US dollar CNY 1 month NDF and the 1 year NDF. All these are quite significant, especially if we have follow-ons, and this is where the rub is, as 2 weeks ago we saw not just a weekly key reversal up in spot USD CNH, but also in USD CNY, the onshore Chinese yuan. And that's the 1 month NDF as well as the 1 year NDF, altogether actually quite an achievement. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the descending triangle pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary harder to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I will keep those targets on my daily chart, as we've already had a false break lower and more recently what looked like a false break higher as well. So as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. Yet I am also mindful of the potential topside now from the more recent moves higher. So for a good order's sake, I've marked for now a primary target X2 topside for the continuing move higher at 730.05, and a secondary, much harder to reach, target X3 up at 732.80. So far today, a slightly higher open and an immediate move lower, looking like a bearish opening black mirror buzz already, and either a bearish dark cloud cover pattern or a bearish engulfing pattern, depending on the severity of the move lower by today's close. US dollar against the Mexican peso. A bearish harami on Friday as the market chose only to have the one session above the flatlining long moving average, currently at 17.08. Now prices dipped but held off testing the broken dark blue highlighted upper time, currently at 17.0882 of the December 2023 to January 2024 mildly bearish shift pitchfork, as well as the March 2016 low at 17.0923. Now, all the recent action is set up for April to be a possible monthly key reversal. That's if we close on Tuesday night, that's tomorrow night, the 30th of April, either over 1704.90 or under 1653.10, then we'd be on. Anything in between, we'll have ourselves a lesser outside month. Right now, we are looking at a monthly key reversal up, if only just. Yeah, just only just. So far today, a slightly higher open and a piercing of the overhead long moving average, but not as high as the previous two sessions so far. And prices have come back down to test the combined dark blue upper time and the March 2016 low. Below is the April 2016 low at 1703.89 and the ever so slowly declining medium moving average, currently at 1693.96.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.